Hi, this is Zak Mir with the Bulletin Board Heroes here at Zak's Traders Cafe for Monday, the 2nd of September. Starting off with the FTSE 100, which is rising up that little August uptrend line there. The floor of that, well, the line there running around 83.50. Above that, we're looking for a breakout through that May resistance line, the red 184.20, and then hopefully progress towards the top of that rising trend channel from September last year, now as high as 86.40 in fact. We do break down, then there's support towards 82.60 and then the 50-day line 82.30 at worst, but hoping against hope that we'll be able to go over the top, go over 8400 over the course of the next week or so. Moving along to the DAX, and here we've had a little pullback from the best levels ever towards 19,000. Still support there at 18,600, and above that looking for the top of that rising trend channel from October as high as 20,000 by the end of this month. But obviously we're going to see how we behave to start this week. The Dow is next, and obviously we looked at it yesterday, but here you can see that a good close there on Friday, well above 41,500, looking for the top of that rising trend channel from August last year, as high as 42,700 by the end of this month. Hopefully there'll be a decent non-farm payroll number and an interest rate cut somewhere in the mix as well. Worst case at the moment is a return towards the top of that gap there, and the 50-day line just around the 40,000 level. Moving along to Bitcoin, and here this has been the problem child amongst the major markets. Trading below that uptrend line there from October, but we need to get back above that at 59,000 to give us a chance of retesting recent resistance at 65,000. So far, the March resistance line there has been failed at multiple times. That's now at 69,200, and that's what we're hoping for. What we don't want to see is the 50 and 200-day line starting to curl down, and then that would suggest that we have to test the low 50,000s area one more time. And that would mean a meeting with the late February support line projection just under 52,000. The other negative at the moment is the way that the RSI is still below neutral 50 at 43, and so that is pressuring this market to head down into the 50,000s or the low 50,000s area. Moving on to gold, and here rather flat end to the week, but as long as we're above recent neckline support and the initial August resistance around 25.20, we're feeling quite chipper about this, even though we've got proper bearish divergence setting in there, so the higher highs on the price, but lower RSI trace, and hoping that this market can regroup above the 25.20 zone. If we do manage to do that, then it's a journey to the top of that rising trend channel from December 26.50 by the end of this month. On to the stocks, and starting off with Amigo, which was covered in yesterday's Bulletin Board Heroes. We were looking for the top of that rising trend channel there at 0.52, and it looks like we've overshot the runway on that one. Massive move there for the shares, up 150%. I don't think anybody else can come up with that kind of short-term charting targeting, and here we're now up to trying to find the next level up, which would be the line that I'm drawing at the moment, which is heading towards a penny. Obviously, we do have the a risk of the company putting out an RNS saying it knows of no reason why the shares have gone up so much, but obviously that's the beauty of the stock market. All the while, we want to see these shares stay above the first target there, 0.52, whatever happens. Next up is Bowleven, which I haven't looked at for quite a while, but here the charting picture a bit like eEnergy, that there's just the first hint of a rising trend channel base. We've got a rising 50-day line, and we're staying above that. We've pushed above that. All that's missing maybe now is a push for the RSI through the neutral 50 level. The initial target here would be the 200-day moving average at 0.31, best case up to 0.44 on the top of that February rising trend channel. We haven't been back above the 200-day line since basically the end of, the end of last summer. So it would be quite a coup for the shares to get back above the 200-day line and change the negative trend there. Beowulf is next, and the reason for the inclusion here is that we've got one of our favorite setups, which is a bear trap island reversal, so gapping down, in fact, twice in the recent past, in July and August, and then gapping up at the end of last month. That suggests that we should be able to at least fill the gap up to 26 pence. Also a test of the 50-day moving average at 28 pence. Best case would be up to 36 pence rather, by the end of this month. But obviously early days yet, early days there, and we don't want to see that gap filled at any time. But the classic setup there of the bear trap island reversal is in place on Beowulf. Onto a stock where I tentatively was bullish on last week. We had a U-shaped bull flag, as I call them. We've broken the previous peak there at 37 pence. Above that on an end-of-day close basis, looking for the shares to miraculously fill the gap down that we had last month at 52 pence over the first half of September. Obviously, one can dare to dream of a move to the top of that rising trend channel at 89 pence, but it's difficult to see what might do that apart from somebody handing the company loads of cash, which it is waiting for, apparently. Concurrent is next, and here you can see that it's blown the lights off the old rising trend channel there from the summer of last year. The nominal level there, £1.28. Above that on an end-of-day close basis. Looking for the upper parallel of that rising trend channel, heading towards £1.50 by the end of this month. On the downside, hoping that there'll be no end-of-day close back below the floor of the gap there, £1.22. So that gives a little bit of leeway for people looking for an ongoing move on that situation. Moving along to a stock which also doesn't get much coverage, which is eEnergy. And here we've got a rising trend channel. We've broken above recent neckline resistance from back in, the end of June there, around the 6 pence level. The longer we stay above that, the greater the chance of move up to 9.5 pence, maybe by the end of next month. The positives here are the way that both the 50 and 200-day moving averages are now both rising, as well as the rebound off the floor of that rising trend channel from this time last year. Moving on to a stock which always causes me immature amusement. It's Futura Medical, and here you can see that we've had a break of that resistance line there from basically the beginning of the year. We're within a rising trend channel base, and the more the shares can spend, or the more time they can spend above the broken resistance line there, around 36 3/4, the greater the chance of move up to 52 pence by the end of next month. Also looking good in the sense that the 200-day line is curled up, and we're probably just waiting for the 50-day line to do the same, and that would mean we're in the run-up to a golden cross. In fact, if you look closely, I think the 50-day line is already rising. We've had a gap higher as well, so that is a sort of combination of signals there, which makes this look like it's going to turn around in a meaningful way. Obviously, we've had gaps higher off the lows before, and they've all been sold into. Let's see if this one will be the exception. Onto another stock which nobody covers apart from me, and that's MTI Wireless. Here we've had a bear trap island reversal for August, so gapping down going into August and gapping up twice since the middle of last month. We've got the 50 and 200-day lines both rising, so it's effectively a golden cross situation, and looking for the shares to hit the top of that rising trend channel from this time last year at 52 pence, hopefully by the end of this month. What we don't want to see really is price action back below the 50 and 200-day lines, now both at 39 pence. Moving on to Oncimmune, which I cover now and again, and here bear trap island reversal, so gapping down in June, gapping up several times since then, and the share's just nudging the 200-day line, which is now rising. That is around the 20.25 pence level, but both the 50 and 200-day lines are rising, so this looks like a mid-move consolidation ahead of a move up back up to the top of the range and 30 pence, perhaps as soon as the end of this month. Ideally, we stay above the top of the latest gap there at 16 pence. SRT is next, another one which looks as though it's bubbling away or bubbling under. We've got the rising trend channel, rather strange one there from the beginning of the year, gapped off the floor of the channel. We've got a rising 50-day line as well. Above that on an end-of-day close basis, basically higher than anywhere higher than we are now. Looking for the shares to head up to 45 pence as soon as the end of next month, assuming that that flush out there in June down to below 10 pence has taken out all the weak hands in the shares. Another company which is relatively obscure is coming up next, Sealand Capital, and here just the hint of that we've got a rising trend channel base. So we bounced off the 50-day line there at 0.08 and looking for 0.16 by the end of next month. Obviously assuming that we can break that 200-day line just around 0.1 pence relatively easily early this week. Obviously if we don't, then it might just be another slide off the 200-day line that we've seen quite a few times in the recent past. Onto URA, which despite this tsunami of emerald production has been, well, it's coming off the lows now, hopefully, but the area just under or towards 1.2 pence seems to be the major support for the stock. If we can bounce here, and as we are continuing that bounce, then we're looking for 1.9 pence at the top of that broadening triangle from back in January by the end of next month. As I said, it's a bit strange that the shares are back near the lows, even though the company has delivered the goods that it promised. On to the final two. The first one is Union Jack, where it looks as though we've got a rising trend channel base. We gapped up at the beginning of July and we haven't filled that gap, even though the shares tried to do that. That's a show of strength, a failed gap fill. And basically above the 16 pence level, looking for 24 pence by the end of next month, maybe echoing the type of move that we had in April for the shares. If you're cautious, maybe waiting for more price action back above that 50-day line at 17 pence. Finishing off with Woodbois, where we're told that the seller is finally out. Obviously took a long time to get that seller out. Here we've broken recent neckline resistance at 0.4 pence. Above that, looking for the 200-day line, 0.64 pence. Ideally by the end of this month, but the key here, staying above 0.4. Double bounce for the RSI at neutral 50 is also a big plus for the shares. That's it for me today. More updates tomorrow.